Okay, we are, I was going to say live, but this is slightly recorded, but we're releasing this the same day we're recording it. So it's Friday.
I think you always say we're live.
We are live. No, I've started changing it a little bit because I realize when we release it, we're not always live. But anyway, this is very current information. I'm with my brother, Nicholas Karadza, and we're here to talk about what's going on in the world of Canadian economy, real estate, what the heck is going on with Bitcoin, all of it. So where do you want to start? I think the Trudeau tax thing.
Yeah, that's where I want to start. Yeah. This gets interesting now again, because so what's the deal? If you made less than $150,000, because that's, I guess, what, the new poverty line or something.
I guess, because when I was a kid, if you made $150,000, I think you were considered rich.
You were loaded. Yeah. So if you made less than 150 in 2023, is that how they're doing it?
Yeah, I can't remember.
I haven't looked at the fine print, but they're going to send you $250.
$250
next spring, right before the election. I mean, it's not.
Oh, so you think the election's going to be in the spring?
Well, I mean, it's closer to the time when it could potentially be. No, I mean, I think they're going to hold on as long as possible.
So they're just completely paying off people to vote.
Well, so it seems like, I mean, that's the argument made towards Doug Ford.
Like every politician does. Yeah, exactly.
Because Doug Ford's sending out $200.
When's he sending out his $200?
I thought those were coming out.
I thought it was January.
Oh, was it January?
I thought so.
So next spring, do we get the $200 too? Does everyone get it? I think everyone gets it.
Really?
I don't know. But so anyway, so apparently there's...
And I'm sure all this money is coming from all the savings that the provincial government has and all the savings that the federal government has. Well, I mean, this is excess. Let's face it. This is excess money.
Well, yeah, we're very fiscally responsible.
Yes, we are very fiscally responsible. So, for anyone new to us, we're just completely joking. They don't have the money to send this out.
But so... This gets really interesting really quick, because we're now so last time we sent out money, it was more money, but last time we sent out money was during COVID, and that didn't end up too well, right? Like it turned into a shit fest really quick when it came to price of goods and inflation, things like that. But for some reason, I'm guessing that they feel that this is going to be different by just putting money into people's bank accounts. I don't see how that's possible, and it's not going to be at the same level. But the same type of impact's going to happen. They're already talking about now, some economists have said, well, it looks like in December, we're not sure they're going to be able to do that. We were all expecting the half-point cut, but now a half-point cut seems excessive because this is an inflationary measure that they're doing by sending out this money. So it's like, what the heck?
It is every taxpayer in Ontario, by the way, $200 early in 2025. Everybody, every taxpayer gets.
So I guess 18 plus then.
Yeah, I guess.
Oh no, I guess less, because you can be a taxpayer.
Sure.
18, yeah, of course.
$200, everybody. There you go. But yeah, you're right, because I think you can generate inflation. I mean, we know they need inflation. So they can get inflation by cutting rates and letting new money come out through lending, new mortgages, people swiping their credit card more. Now, I guess credit card stuff's going to stay high, but new mortgages and loans and all that kind of stuff. If rates come down, new M2 gets created, thrown into the economy. You get to inflate the money supply, which helps you pay for all the debts in the world, both private and public. But if you don't lower interest rates aggressively to get the new money flowing into the economy, the other way to inflate is to just print the new money and mail it out. And you mail it out into the economy. So there's multiple ways to get the new money into the economy. What are you thinking about right now? But when you mail it out into the economy, it tends to hit consumer goods first. See, if you lower interest rates, it hits real estate prices first, because the way most loans are created are for real estate in this country. And so that people borrow the money, and it goes to real estate first. Real estate prices are impacted the quickest and the hardest. They go up, quote unquote, up, because the money's flowing to real estate. But if you print the money and send it out into people's bank accounts, it's still debasing the currency, and everything goes up because the values of the dollar are going down. But it hits things like grocery prices first and retail stuff first, because people spend it, and it hits those things first. And then, the price of a hamburger goes up at the grocery store first, and people are freaking out about the grocery prices.
Yeah, but I guess so it's less money this time, although combined in Ontario specifically, it's still it's 25% of the original whatever it was called, CERB payments or whatever.
Well, that's if you think it's going to stop, but sure.
Well, yeah, okay.
Why can't they announce another one in the summer?
But I'm just thinking, because Food would be one thing, but because supply chains aren't shut down like they were stupidly done during COVID, then I had to add in stupidly. Then it might not be as bad because potentially the supply can keep up, so you don't get the same ramp up.
Sure,
but overall, it's the same impact.
It's the same impact. The currency is being debased. Sure, it might not show up in different places because you can, nobody could order a sofa or a rug or anything before because of the supply chain.
Yeah, and the line might not be straight up. The line might just be, it will go up on just a little bit less of an angle, and the same thing happens. So.
Yeah, but the bottom line is the trend continues.
Yeah.
People look around a few years from now, they don't understand why things are more expensive. They don't understand why their incomes can't buy them the life they thought they could afford, and it can't buy them the life they could afford, even 3 or 4 years ago. So
I swear, once you see this stuff, you can't unsee it. It's like
most people cannot see it.
No, I know. And so much of the conversations that I see if people have, they're not. This plays no role in the conversation whatsoever, and that's fair because they haven't seen it. But once you see this and how it impacts everything, you can't unsee it, and that's where things get so screwy. And what you were asking me when you were looking at me, and I was kind of trying to figure something out. I was looking at this, and I'm like, I don't get it. So obviously it's a political move. So the NDP is pushed for it, and they're pressuring the Liberals because everyone wants to bring down the Liberals, and they're like, this is their chance. They're going to try to squeeze them for more stuff. At least that's Jagmeet Singh's speech. Is like, we're the ones that push for this thing, right? And
is that what he said? I missed some.
Yeah,
okay.
Yeah, he goes, they wanted to eliminate, and there's the HST portion of it too, which we didn't even get to.
Yeah.
They want to eliminate HST on certain goods permanently, but the Liberals didn't want to do that. So this is the next best thing, and we're the champion of the people. And I'm like, well, these guys just like, it's a political move in the short term, but they just obviously no one's thinking. I guess no one understands it.
There's no incentive to think because you're just trying to get reelected.
Well, that's what I was going to say. So either no one understands the long-term ramifications, or they're just like, screw it, we don't care because we're just going to try to get elected, and this is going to get us.
There's no way the current regime's leadership is thinking smartly about anything.
Other than trying to get reelected.
They're just trying to get reelected. Send everybody money, send out the checks, give them everything they want, get us reelected. We'll ruin your lives a little bit more next time.
Yeah.
Or a lot more.
Well, there's the HST break too on certain goods, and some of it's food. I think it's weird things like prepared restaurants and prepared food. And I'm like, well, what about just groceries? Like, how much tax do we pay on some of those? And then we're doing it on beer and wine. And I'm like, well, why do we really need to do it on beer and wine? If that's where the priorities are, that's interesting how that gets lumped in with the priorities. Then we're doing it on kids stuff, like kids' clothes and things like that. And that's cool. I'm all for that.
But we're increasing carbon taxes in February, early next year.
Well, yeah, no, we can't.
Why don't we just get rid of the extra taxes instead of doing this little stopgap measure?
Because we need the carbon tax ridiculous. To pay. Tom, everyone finishes ahead with the carbon tax. So haven't you read the press releases? Jeez, man.
Oh my God. Okay. So this announcement made me just think, listen, if you are fortunate enough to be earning $100,000 in this country, the federal income tax component is $14,000. The provincial income tax component is $7,000. CPP and EI contributions are $5,000.
The provincial is, I'm just asking this for me, it's
different by province.
But not, is it a ton different?
I haven't really done the comparison.
So in Ontario, it's 7.
Yeah, so it's 7. So in Ontario, you take 14, 7, and 5. I'm rounding a little bit. It ends up to be 26.14 of the income that you're generating goes to tax. You're now in the marginal tax bracket of 31%, which means every next $100, $100, or $1,000 that you earn is taxed at 31%. So your average tax rate through the first 100,000 is 26%, but now you're in the next tax bracket. For every dollar you earn, you're losing a 30.
Okay, like 31. These checks, because more than likely, I didn't see this yet. The checks are likely counted as income, and they're going to be taxed. So you're not really getting the whole amount, right? But anyways, go ahead.
So now the next $1,000 or $100 you earn, whatever, you lose $31 or 31% right out of the gates. Okay, but then, if you earn that much money in Ontario, you earned 100,000, you're left with, let's just say 73, 74,000, whatever it is. Now you take what's left, and then if you go and buy stuff, you pay 13% on what you buy. And then if some of the stuff that you buy is gas and alcohol, there's all kinds of weird and wonderful taxes stuck into the alcohol and gas in this country. And then you're paying a carbon tax on fuel and natural gas.
But then the best is then you pay the sales tax on the carbon tax.
You pay the sales tax on the carbon tax, which is absolutely ridiculous.
So hold on, you were down.
Or you pay the carbon tax on the whatever, it's reversed, but it is double taxed there. Yes.
So 69%, you're left with after 100 grand, you're basically pay 31%. So you're left with about 69% roughly. And then if you pay, what's 13% of 69? I'm just curious from my own math here, is basically not 8.97. So it's 9%. So basically after the HST, if you're looking at that, you're down to 60%.
So you're working and listen, it gets completely worse, because after you earn the $100,000 in this example, and let's say I'm rounding a little bit here, you're left with $70. The currency in this country debases at 7% a year. So if you're just like, oh my God, I'm going to be smart, I'm going to save all of that money because I'm so fortunate, I get to live at home and I go to my parents' fridge and eat all the food at their fridge, whatever it is, and I'm able to save the full $70. But I just want to save it in the bank. Well, you're then taxed with a 7% debasement tax, the hidden silent thief, which reduces your $70 in purchasing power down to $65 in 1 year. So if you do everything right and you're just like, I'm just going to save what's left.
Yeah, you're only paying income tax and you're saving.
I'm not spending. I'm wearing my track pants that I got that I was 10 years ago that have holes in them, and that's what I'm wearing every day. You're still losing 7% a year based on the debasement of the currency, M2 growth in this country. And if you just sit on that $70 for 5 years, I worked it out.
Yeah,
it comes to $45. You're left with $45 in purchasing power. If you took the
in 5 years.
Just in 5 years.
Wow.
So you did everything right. You're like, I'm going to save, but I don't want to become some master economist and figure out things in the economy. I don't want to become some master stock investor. I don't want to become some master real estate developer. I'm just going to save the money. Well, you're screwed. Sorry. You paid all that tax. And then if you just keep the money after 5 years, the purchasing power of that $70 goes down to $45. And then if you choose to invest it and you actually do the research, the homework, you take the risk, you do all those things, and you're lucky enough to make a profit, you pay capital gains tax. So if you're lucky enough to take your money and win, the government then takes a part of your winnings after they tax the original money from you in the first place. If what's left, you manage to grow it, they're like, well, no, we need part of that growth. Or then you say, I'm not going to invest it in real estate, or I'm not going to invest it in stocks. I'm going to start a business with my leftover money. Well, if I take my leftover money and start a business, then there's payroll taxes and corporate taxes that you're going to have to pay. And then if you spend the money, if you spend, here's the great part, Nick. After you're taxed, if you decide I'm not going to invest, I'm not going to business, I'm going to, instead of my $70 that I was going to just keep and sit on, I'm going to spend it with your business because I like you and I need a new pair of track pants. Well, guess what? When that $70 goes over to that new business, do you know what that's considered for that business? Income. And now they're going to pay tax on the $70 that was already taxed, that is transferred to that new business. It's taxable income. And I know there's deductions and all these weird and wonderful things. It's taxable income. It's completely wild. Mm-hmm. The whole thing is just completely wild. Yeah. We pay, I guess the bottom line is we pay far too much tax in this country. It's too much. And layering on these carbon taxes is just too much. It squashes the entrepreneurial spirit.
We were talking, remember, I don't know, a couple of days ago, we were talking with Daniel Foch, and we were doing the podcast, and he was talking about investing in businesses and like the benefit of that and how too much of our economy is based on, real estate and real estate transactions. And he's right in a lot of ways, because, and when you put it like that, it's that a lot of that industry of real estate investment as an investment exists because of this. And we've shared it here, like our business only exists because of this, right? But if you don't do something, you're screwed. Like you lose out so fast that you have to do some sort of investing or something. And then it makes me think of that whole financial industry and all these mutual funds and all these investment advisors and all this stuff. That whole flipping industry exists because of this.
Yeah.
They can't
our business exists because of this.
No, I just said that.
Yeah. Sorry.
Yeah. You obviously weren't listening to me.
No, I was trying to think of something. Can't multitask.
But I mean, it's not, so the real estate side of things, there's too much focus on that and not enough on entrepreneurship, on research and development in this country and innovation, like 100% not enough. We need more of it. But I looked at the real estate side of things and it makes sense. But then I'm just looking at just think of that whole side of the banking system. All that investment bullshit. Like it is like all those ETFs just scraping percentages off people every single year, no matter what, because most of them don't even keep up with the 7% debasement. Most of them don't keep up with that, and they're still taking their fees.
It's crazy.
Right? And they're scraping all that stuff off. And I think that's why
the average Canadian's just getting robbed left, right, and center.
Yeah. And that but they're getting $250 next year.
Oh my gosh. And you know what else? Just hearing you say that, if you're left with the $70 in our example after tax year, and again, for anyone listening, we're rounding here, but if you're left with the $70 or $70,000 after the $100,000 income, however you want to look at this, $70 after $100, whatever it is after tax in our example here, and you spend that money and then that business is taxed on the $70. I wonder if someone was to just create a little exercise where you track $100,000 through the economy and how long it takes until the government just takes all of it. Do you know what I mean?
It would slow down at the end because there's so little to take. But still.
Exactly. Yeah. But if you just grind that down, how long until the government just tracks those bills as they work their way through the economy?
Yeah, that'd be awesome.
Absolutely take everything. And I know there's, some businesses are going to grow, but I just mean track the $100 as like this one absolute number that is just flowing through the economy and see how many times that $100 is taxed. Mm-hmm. Because then think about it. That business that accepts the $70 from you, they're taxed on it as income. Well, then they go from some of that money, that $70, and it's going to be an expense to the business, but they're taking some of that money and they pay payroll. And so from the $70 that was already taxed by someone earlier in the cycle here, it's then taxed as someone else's income again. And then the same thing happens again. And that's why I think it just grinds the economy. The way when you're saying we have to focus on like productivity and innovation, like you're 100% right. And I think the way to do that is just lighten the tax load, make it easier for people to start businesses.
I know, but yes. Except the narrative on that is always explained like, oh, well, you're making it cheaper for the rich people. You're making it cheaper so the people that make more money, they benefit the most. Mm-hmm. So that's the narrative that you have to overcome, because from the political angle, that's the way they always position it. For anyone that wants to keep taxes or implements new taxes, they're like, hey, we're taxing the rich, we're helping the poor. So it's always the Robin Hood story. But there's no second order effects or beyond that looked at. Right. So like if someone has a $200,000 income and you drop tax rates, they're going to save more money than someone that has a $50,000 income. But the question is, what does that do at a larger scale? What does that do for the economy, and what opportunities does it open up for the person that might have the $50,000 income? Does it make it easier for them to get further ahead and have 75, 100, 125,000? Does it put more jobs? Does it bring more investment? With the investment, does it lower costs? Does it help infrastructure? Does it build hospitals and schools because things are thriving? I don't know. Like, obviously that's a conversation to be had, but there's examples where that does work that way. Maybe here with as much corruption and stuff that we have, and as much waste on all these stupid government studies that we do, and this useless carbon tax, like let's collect the money and give it back. Like, this is stupid. Like, we're just operating at a stupid level now, and so it just doesn't do anything. And I think that's where that's the hurdle that I don't know. I feel like that's one of the biggest barriers, because people will look at the initial effect of things, and it's hard to get them to look maybe a little bit longer term or beyond that initial effect and how it impacts them personally immediately. And I understand where they're coming from with that, because that's important. Everyone's got their own lives to lead and their families to protect and things like that. I understand that. But then there's in some ways we got to look a little bit past that. And I think that's how we get out of this trap, because this trap goes nowhere quick. Real estate investing isn't always easy, but it can be relatively simple. And that's where the Rockstar Inner Circle comes in. Look, there's a lot of real estate investing information out there these days. That's why it's so important to pick your sources wisely. And even though investing isn't always going to be the easiest process, it does not have to be super complicated. That's where tried, tested, and proven strategies like the ones that Rockstar members use come into play. Everything shared in the Inner Circle is built from firsthand, on the streets experience in the current market. It's all up to date, things that people are actually implementing today. In fact, the ongoing courses are delivered live, so they're always up to date with the absolute latest real life experiences. As a Rockstar member, get ongoing access to over 20 different systems and programs covering things like which properties investors like and why, our private rental system, what opportunities the investors are scooping up in student housing currently, the legal side of investing, why or how to use corporations as an investor, a mortgage class with the absolute latest options and programs to build your portfolio as an investor because they're different than a regular home buyer. And there's a whole ton more in all those different classes. Of course, to implement all these strategies, members get access to unlimited private one-on-one coaching with an actual human experienced investor, not an AI chatbot, not ChatGPT or anything like that. It goes beyond training, classes, and real estate. It's a community for people looking to take control of their own finances, to give themselves options and allow them to live life on their terms. With ongoing live and virtual opportunities to connect, it's built for investors by investors. You can see everything members get at rockstarinnercircle.com/member. It's rockstarinnercircle.com/member. Now back to the show.
And you're right. I think when people talk about it and economists talk about it in this country, they don't understand that there's this debasement at the base of all of this. That when you talk about changes in the economy and real estate and stocks and businesses, there's this underlying foundation of the monetary units in this country that are just being debased at this rate. M2 just grows and grows and grows. So everyone's focused on all these kind of things, like tax rates and businesses and stuff, but you got to fix the base.
Yeah. And it was interesting when again, when we were talking to Daniel, and he said
that podcast is going to come out, I think, on Tuesday, by the way.
And one of the things he said just about, when we were talking about property prices, and he's like, well, how much of it is the currency being devalued versus the actual prices going up? And I was like, well, that's like an astute observation. Because,
well, Daniel's one of the rare guys who gets it.
Yeah, no, I agree. But not many people in any industry around real estate money, not many of them will speak that term at all. They just won't look at it. And I'm like, and maybe we're biased because that's my belief as well. So I believe that's an astute observation. And some people are like, that's stupid. You guys don't know what you're talking about. That's fine. Everyone's entitled to their opinion. But
no, it's an astute observation. I've had enough. It's an astute observation.
Yeah. I'm just wondering I was just thinking about all the financial planners I might have pissed off earlier when I said,
no, but a financial planner that really just wants to think outside of their own incentives. And there are many. We know some great financial planners.
Every industry.
Who are into real estate, who are Bitcoiners. They're just thinking.
No, there's amazing ones. And like every industry, there's bad ones, 100%. Yeah.
They get it. But you're right. It's just the base of the system. And I think that's what attracts me to something like Bitcoin. It's just pure monetary truth. That's really all it is. It's something so simple. Can't be debased. Mm-hmm. It's just truth. And I wanted to talk to you about that because Bitcoin's market cap on this latest run up, it's now by market cap, it passed Tesla, it passed Berkshire Hathaway, Tesla, Meta, silver in market cap, the Saudi Aramco, I think, is the big oil company out of Saudi Arabia, and Bitcoin's now stands 7th. Ahead of Bitcoin, next on the list to take down is Alphabet, which is Google, Amazon, Microsoft, Apple, Nvidia, and then gold. So Bitcoin
how close is it to what's the actual next one that you said? Alphabet?
Yeah.
And how close is it?
Close. $2.7 trillion market cap for Bitcoin right now, 2.8 for Google, 0.9 for Amazon. And then it gets into 5th place, and then Microsoft's 4.2. So it's got a bit of work to do, 4.2. And Apple 4.8.
And over time too, it'll be volatile. 5. So it might get hammered down a little bit before it comes back up. Who knows? We'll see. But
but it is volatile. But I do kind of respect Michael Saylor's line that volatility is vitality. Mm-hmm.
And short term too, right? When you zoom out, it doesn't.
And I don't have it in front of me, but somebody sent me a text saying the market cap of Bitcoin now surpasses the Canadian dollars out in existence, but I don't have that in front of me to kind of share. But it's clearly.
I want to look up exactly and remember the number because I always forget how much gold Canada owns.
I think the last time I checked, it was like 72 ounces or something, which you can hold in your hand. Like a 10-ounce bar of gold is just like a little bit bigger than this thing in my hand right here. So like you can hold 72 ounces of gold in your
and
hand.
we sold
and that's the country.
We sold ours at like a low, like it was like this massive dip is when we sold everything. How did we get conned into that?
The next thing I wanted to talk to you about was just how much I think the times are changing and how humans, like human nature, just doesn't see it. Kind of just reminds me of the early 2000s where in the tech bubble, a lot of people think, oh my gosh, the world's changing. And then some people are like, see, it didn't really change that much. But some of the things that came out of the tech boom really did change everything. You got the cloud, you got the internet streaming through every home and fiber optic cable and Wi-Fi's that faster than we can ever imagine. You have Amazon that's delivering things to everybody's doorstep and change the supply chain for retail. So a lot of things did really change in that area. Some of the frothy companies that existed back then and had big market caps kind of disappeared, just kind of like every evolution. But this time, it seems like we're going through another change. The internet has reached this maturity level where information transfer is now kind of global. TCP/IP is set as the standard. And now you have this next evolution where Bitcoin's coming onto the scene and saying, hey, we're going to be another protocol now, and we're going to be the protocol that transfers value around the world. And we'll see if people are going to standardize on that. I think it's happening in real time. But then you have something like X becoming bigger than mainstream media. Right now, you have politicians who are losing their influence. You have countries like Argentina who voted in Javier Milei, who's trying to crush inflation and crush bureaucracy down there. You have the BRICS that are kind of organizing differently. You have El Salvador going on the Bitcoin standard. You have Dubai that's kind of exploding in growth. And then you have a company like MicroStrategy on the stock market who's saying, hey, you know how we valued companies for all those years on income statements, income expenses? How about we just rip all of that up and you can just value us based on our balance sheet. And we're going to issue equity and debt to just buy this most beautiful, pristine asset, Bitcoin, and put it on our balance sheet and try to figure out what we are. Good luck. And I feel like they just took a wrench to the entire stock market, just threw it in the stock market and said, okay, try to figure us out.
Yeah, it's going to be interesting to see how that goes. And I mean, it's already been a really interesting case study. And what's super interesting about MicroStrategy is that it got no press around it. Like, I guess I don't know if it's still higher than NVIDIA, but about a month ago, it had higher growth than NVIDIA over whatever period of time people were raving about NVIDIA because of the growth. I'm like, and I was showing a friend of mine, I'm like, well, look at this MicroStrategy. He's like, what's that? He's like, he didn't even know. And he's into the markets a little bit, into investing stuff. And it just got no airtime because NVIDIA was like the golden child of the stock market, and no one was looking at this. And then all of a sudden people were like, what the hell is going on?
And I think most financial planners or anybody in Wall Street, Bay Street in Canada, they can't make sense of MicroStrategy because the way they look at it is this. They're like, I don't get it. The software company doesn't look like the best. And they're just buying this Bitcoin thing, putting it on their balance sheet. And, the market cap of MicroStrategy is like 3, 4, 5 times whatever the Bitcoin value is on their balance sheet. Like, I don't understand like what this business is. It doesn't look right to me. I'm not going to touch it. And the reason is they haven't put in the hours it takes to understand Bitcoin. And once you understand Bitcoin and what Bitcoin is and the finite, issuance of Bitcoin, and then somebody putting this pristine capital on their balance sheet and turning into what Michael Saylor's saying, a Bitcoin bank, almost like an oil refinery where he takes Bitcoin and kind of offers it to the market in different kind of flavors. Like an oil refinery would take crude oil and offer it to the market in different ways. That's what he's doing with Bitcoin. I don't think people can really understand this concept. It takes hours of research.
I think, yeah. But going back to what you said earlier, I think what's more interesting to me, one of the things that often isn't looked at, and maybe it's a good thing, maybe it's a bad thing because of one person's controlling it, but it's what SpaceX is doing with the satellites and the internet connectivity. What's it called? Why am I
Starlink?
Thank you. With what Starlink's doing with the network that they're building out, because it's really creating accessible global connectivity, which really changes things. Because there's still big segments of the globe, but that really don't have the connectivity that we just take for granted in where we live and where most of us travel and that type of stuff. And that changes.
Well, look at us at Croatia in the summer.
Yeah.
We can't even really get a good network connection in 2024.
But think how quickly that changes things when you just have this huge portions of the population now still that are still coming online with different things, whether it's more access to information, or what happens with a global money or a global asset that's easily accessible 24/7, that type of stuff, So it gets really, that changes things a lot. And it's something that no one's really talking about, that he's already built out this massive network of it. And it's like, it's just getting stronger and stronger and covering more and more areas. And it's just not spoken about. I'm like, I don't know. I feel like that's a massive game-changing thing around the globe. And then, some people are going to have different opinions. They're going to be like, well, how can what? Because one guy's going to control X, which is this kind of news platform, and he's going to control the network that people access all this stuff on. It's, so.
And he's going to control the rocket ships that go all over the place.
So people that
he's going to control the cars that are on all the roads driving with no drivers.
So people that like
we
him,
live in a simulation. This must be a simulation.
Well, people that like him are going to be like, oh, that's great, it's fine. And people that don't like him are going to be like, this is horrendous. And I mean, there's an argument for both for sure. You know what I mean? There's definitely risk there.
But with everything you just said, it feels like to me, in humanity's kind of timeline of history, we are at this inflection point, and a lot of people dismiss it as like, that's what everybody says, and every generation thinks things are changing a lot. I'm like, nah, I don't know. Like, we had this information age come on with the internet, and now we have this money that is digitally native, constrained by physical constraints, that's going to operate globally with a global network. I really think the old banking, I guess my kind of hot take that most people will not agree with, is that the current banking system, at least in the West, is completely fucked. And they just don't see it. They're all based on a collateral of bonds that are of no use and are, how Greg Foss for years would tell us that fiat is a contractual agreement that is like programmed or contractually designed to debase. I'm messing up his words, but basically he said, like, that's just the math. This has to lose value. And the whole banking system is based on this bedrock of bonds that is just losing value. Mm-hmm. And now you can see it because there's a mirror, and Bitcoin is the mirror to that. Before you didn't really have a mirror.
I don't think they're fucked at all. I just think it just stays the same, and maybe it's a slow grind down, but maybe there's this other base layer that people kind of take things out and put things into and stuff. I don't think it changes.
I know it's like more of a hot take, but think about this. Did you hear that CNBC clip that we just talked about, where that guy from the US is saying, hey, we're going to have new products for pensions, and we're going to give out loans where we incorporate Bitcoin into the loan? When that creeps into the market, what role do bonds play anymore? Yeah, like, do you want to buy anyone's debt right now? A country's debt?
No, but I didn't before.
No, but the whole pension industry is buying sovereign debt and companies' debt.
Well, they're mandated to.
This is what I'm saying. But as it loses value fast, the 7% debasement of the world compounds. So now they're mandated to just lose money. And it was fine before because the alternative was like real estate. So maybe they could get some REITs, and they're not really going to buy single family homes. And that was the opportunity for the real estate investor to get in there. And it has been and will continue to be an opportunity to own that hard asset. But now you have a banking sector and pension funds specifically that are mandated to buy debt. But there's this thing out there that is really easy to buy. It's why they're all piling into MicroStrategy. Because MicroStrategy is saying, oh, you're mandated to buy debt? How about this? We'll offer you some debt from our business that's backed by this thing, Bitcoin, and they can't issue it. The guy's raising like $3 billion in like 48 hours. And I guess my thinking is this is the black hole concept of Bitcoin that sucks all the financial value out of one system into another system. And MicroStrategy has opened up this portal. And this is a portal for Wall Street. And the money is being sucked from one system, and the banks don't see it coming. But when a lot of people say, "Hey, you know what? Why am I holding $2 billion in of these bonds for this sovereign country, and these bonds are losing value for people that I'm kind of responsible to? I have a fiduciary responsibility. How long do you hold on to that fiduciary responsibility when you know these are losing value?" And before, you were trapped in the system because it wasn't really easy. That was like the best thing. But now, there's this thing.
I get it. You're just using logic. Like, I get it. But what I'm saying is so there's two things. I think you're underestimating how long regulation can keep things the same. Look at the real estate industry in Ontario, for example, and the protectionism around the MLS system and that type of stuff, and around transactions and being licensed and things like that. So, like, just as one example, but there's examples like that over and over again. So that, I think that so when you say when I hear you say they're fucked, meaning like, oh, they're really screwed. Like, there's
over the next decade.
Yeah. I think it's longer than that. and it's a slow grind and a slow change. And what happens then is when you think there's this, how much things are changing, I think maybe things are changing a little bit to you because, and me, we're the old, not the old guys, but we're kind of in the middle now, right? So it's like, it's a change from where things were. But then for people that are younger that are coming into the economy now, this is the norm. So there's no changing for them.
So they're going to buy bonds?
It's like and I'm not talking about bonds. I'm talking about all these other things you were talking about and how things are going to change. They weren't buying bonds before. Were you buying bonds when you were 20 years old?
No, but when they get jobs, so that 20-year-old now who 10 years from now goes in to get a job on Wall Street to run some pension fund, they're going to look at the market 10 years from now and say, yeah, you know what? I really advise my clients to buy bonds.
If regulations are in place, so let's take the insurance industry, for example. So you think a 35-year-old is going to take that job? Take the insurance industry, for example. Okay. So someone goes into the insurance industry and we're in this current system where they need income to pay their bills and to support their family. How many people are in jobs right now doing things that they're like, yeah, I don't mind my job. I like my job, but I don't completely agree with this aspect of my job. But it's my job. So yeah, when they have those incomes put in front of them and they need that, and there's regulations in place. In this example I'm using is like the insurance industry. Okay, life insurance, no problem. You still got to do this at whatever level. Maybe it's changed slightly because there's this slow grind and you don't have to have 20% in bonds. You need 10 or whatever these numbers are. Then yeah, I think it still exists.
So you would have sold fax machines in 1998?
So I don't even see, it's not even an applicable example to me.
No, well, fax machines are how people communicated.
Well, if I could earn if they're like, hey, guaranteed whether no matter what happens, you're going to be making the $150,000 and even if I make no sales, well then yeah. But you're asking me to sell something it's like if I wanted to sell something that's like a vial of poison now for $1 million. Like, hey, this is guaranteed to kill you. Give me $1 million. Well, no, it doesn't make sense. That's what I mean. But like where there's a demand in a market,
I'm saying anyone who looks forward, like in 1998, if you came to me and you said, hey Tom, I got this great job with Xerox for you. You have a career at Xerox. A lot of people took those jobs. I remember because I was getting employed at that time. And if you represent,
you've answered your own question. A lot of people took those jobs.
No, but then there was people,
and then they changed after.
There's people like me who didn't take those jobs. You couldn't pay me enough to take that job. And what I'm saying is that existed for me because there was the internet. And there was this other opportunity. Otherwise, I would have been forced to take selling the fax machines job. And what I'm saying now in the financial industry, there's more, I'm talking about the next 10 years, there's more and more people who are going to see a different option. And what I'm saying is, no, hold on for 1 second. It didn't exist.
I'm agreeing with you. I'm just not agreeing with the level that you're saying.
I'm saying
everything's screwed and it's just going to blow up in 10 years. I'm just saying, no.
I am saying it's a hot take. It's not like something that's going to happen tomorrow. But I'm saying what I don't think the banks see coming is over the next 10 years, there's going to be more people like me who look at this whole system and say, I'm not going to go work for TD in that role. Yeah, maybe I will for like 6 months if I have to. I can't get another job. Of course, like you're saying, I got to, pay the bills and that kind of thing. But there's going to be more people drifting off into this other world. And the reason for that is because Bitcoin now exists. Whereas before, you had no other alternative. If you were going to do something outside of the financial system, it was kind of real estate. You were going to go into real estate as another asset class. There was no other alternative. And what I'm saying now,
but it's just a transition to other things.
We're saying the same thing.
It's the normal thing. It's happened before. It'll happen again.
Oh, so we're agreeing. Yeah,
I'm saying I agree with you. But when you say the statement, they're fucked. Like it's like I take that and like I tried to explain before. Like it's like, oh man, like they're screwed. This thing's they're gonna blow up or they're gonna implode.
Well, I think by 10 years,
within 10 years, I'm like, no, I don't see that happen.
By 10 years, they will be. And the reason for that I think is, what products are they offering the market that in 10 years you're going to want? Like, what is it the banks do right now? Like, they give you a savings and checkings account. No, already the savings account has been replaced by, let's face it, real estate or stocks. Nobody kind of saves. Remember the button checking and savings? Yeah. The savings button on the ATM, you might as well just put a picture of a little greenhouse or a picture of a stock or something. That's what everybody does with the savings button. That's going to annihilate it. So now everybody just...
Well, when interest rates were higher, it wasn't. Because you saw how the flow of funds into those types of accounts, money markets, stuff like that, when interest rates were higher, flow of funds were high. So people, because they don't look at the 7% debasement, they're like, oh my God, I can get 5%.
Agreed. And mathematically, I know they can't keep interest rates high.
So
yeah, for a little brief period, I'm talking 10 years. I'm talking 10 years.
Yeah, I just think, you think in 10 years, everyone's going to figure this out. And I don't.
I don't even think they're going to need to figure it out. I think it's going to be forced upon them.
Yeah, it might be.
That's what I think. I think it's going to be forced because, again, if I just go back to...
But you would have said the same thing 10 years ago, and we were saying it 5 years ago, and it's not there yet. And I'm just saying it's going to be
We did say the same thing 10 years ago in 2008 about real estate. We said the middle class is going to be destroyed in this country because there's going to be a separation of people who own assets.
Most people haven't figured it out, and it hasn't changed much.
But it doesn't mean it hasn't... It has changed a lot.
No, what I'm saying is like the industries haven't changed much since then. Like the where people are putting their money, what they're looking at, that type of stuff.
Well, I would argue that it has changed a lot because in 2008, the reason we started Rockstar is because there was no realtors who worked with investors. Very, very few. I know that sounds crazy to people now, but in 2024, there's more freaking realtors that work with investors than you can kind of shake a stick at. So I think it has changed a lot because in 2008, we really could, there were some realtors, but there wasn't every second realtor who said, buy pre-construction. I specialize in investment in real estate. There's a lot more. The market has changed. But I think the reason I want to go back to this Bitcoin thing is the reason that this is bigger than all that is because there was no option outside of the system. And what it does is it sucks capital. Like every time somebody buys Bitcoin, they're moving from the fiat world into a completely different system. We can argue about MicroStrategy and ETFs all we want if that keeps it in the system or whatever. But what you're doing is you're selling fiat. You're like basically saying, I don't want these Canadian dollars anymore. I'm buying something now that's completely outside the system because when you bought real estate, you were doing a bank loan. You were using the banking system. If you were buying stocks, you were going to TD investing and kind of buying stocks. And I know
it's not, the returns aren't nearly as attractive, but you could buy gold, which was correct. They basically did the same thing, and people weren't doing it en masse.
People weren't doing that. Yeah, exactly, because it was kind of like a rock.
But you think now, so it's a rock, and you think people are going to value the global network, and they're going to, because the hang up for people is like, I can't even touch it.
Well, I can just see the numbers. I don't have to think. I can see the growth of the Lightning Network, and I can see what the market is valuing Bitcoin at. So I just think there's a hole in the financial bucket. So if you think of a bucket of water from like a well, remember in our grandparents' house, the well bucket, that metal bucket?
Yeah.
If you just put a hole in that, make the hole just the size of this pen. Just, that's all I'm talking about. But if you put that hole in the bucket in the financial system, that's a small hole in that bucket. But you let that run for 10 years, there is a lot that's going to escape from that bucket. That's all I'm saying. And the reason is because the hole now exists, which is Bitcoin sucking it out. That's what I'm saying.
Yeah, like I said, I agree with you. Like I'm not disagreeing with the principle. I'm disagreeing at what the result looks like in whatever period of time. Look, man, they've managed to fucking hold on and kick the can down the road way longer than I would have anticipated before. And I just don't think that, I guess maybe I've lost faith that that's going to change as fast as I thought in the past.
Sure.
That's it.
That's
really what I'm saying.
Yeah.
I just don't think it's going to happen. But I do see this stuff speeding up. And I don't know if I see it speeding up from, like if it's really speeding up or if it's because I'm just more aware of all the different things that are going on. Because 10 years ago, I wasn't tracking all this. Well, I mean, it was barely existed anyway, so I wasn't tracking all this different stuff. And maybe things were exasperated or amplified because of what happened during COVID, when everyone's like, holy shit, like we're losing out. Like everyone's lived through an inflationary period now. So everyone's seen this, like this inflation thing is real. Whereas before,
so when everyone understands, as you were saying before, not everybody understands.
Yeah. So maybe people have a short memory too. So if they get things back to half normal and they get a $250 check, I don't know how much, like I don't have faith.
But I'm separating out what people see and what it will actually happen.
Well, I think people need to see it for it to happen.
Yeah,
at the level that you're talking, to have the impact you're talking about, I think people.
So if a nation, what about this? Just talking to your point, you don't know if it's happening faster, because I think it's happening faster. If within the next 12 months, a Middle Eastern country comes out and says, "Hey, we stacked sats."
Yeah, no one in Canada, like few people in Canada are going to care.
Oh no, I'm just talking about the next nation now. Oh, UAE is adding this finite Bitcoin thing. I'm not talking about the average Canadian citizen here at all.
Yeah.
I'm just talking about
the U.S. said they're going to keep theirs and try to buy some. If Trump holds true to what he was saying before. A Bitcoin strategic reserve.
Yeah. And that's just what I'm talking about. These are leaks to the tradition. I guess the way I'm looking at it is that like Bell Canada, if it didn't transition to like the iPhone saved the Bell companies in Canada, because if they didn't go from selling landlines to data, they'd be done. So like that's an example of an old system that kind of managed to your point, like which is against my point, survive because it was like, holy shit, we can't sell these landlines.
And that's what I think is going to happen the same way.
And I think some banks will change, but I think most of them with these committees and boards and they're slow. You're going to have Cantor Fitzgerald, who's the new Treasury Secretary, who's come out and said, we are going to be a Bitcoin bank. He's on the record saying Cantor Fitzgerald is going to accept Bitcoin as collateral.
Yeah.
MicroStrategy is saying, we are going to be a bank. I'm like, oh my God, the new banks are forming right now.
But this is exactly what, so the banks, remember, so I'm looking at it more specifically, I guess, in Canada through that lens and through regulation and the way our country is structured. The banks will be given every single opportunity to slowly, like the big
agreed. But some of the banks are capitalists as well, and if they are losing money to Cantor Fitzgerald or MicroStrategy on financial products in the U.S., they're going to lobby hard here in Canada to say, "Hey, we better be able to accept this as collateral as well, or we're going to die."
That's what they're going to do. That's why I don't think the banks are screwed. Like you were talking about, they're just going to change.
But that's to me but some are not going. Some aren't going to make that transition. That's what I'm talking about.
The 5 that we have here because they're so protected.
Yeah.
And I think
that is my point that they're going to die. But this is my point that they have to. This is exactly what I'm talking about. The base of their existing system has been debt. And they're going to have to transition. They're going to die the way they are now.
They're just offering new products like they've done in the past.
But this is, so we're agreeing, like this is what I'm saying. Like my hot take is that people think the banks as they exist today, buying bonds and doing the things they're doing today.
Yeah. You said they're fucked. And I'm like, I don't understand. So this is to me, I just misunderstood what you meant, why they're fucked.
Sure.
Because I'm like, I don't look at it like that. They're still going to exist. And I think they're so protected with regulation that not much... The structure of the banks are going to change. They might offer new service products and stuff because of the changes in the global system. Yeah, I agree with that. Yeah, for sure. Mm-hmm. But I mean, they're going to, if we had a free market bank.
I think you think really nicely and you're just like, well, there's 5 big ones in Canada.
We don't have a free market banking system. I would agree with you if we had a free market banking system. Mm-hmm. And if that changes, I agree with you more. But I don't think that's going to change. And that's why they'll be how they are.
Yeah. And I'm saying it's a hot take.
Yeah.
I'm just thinking like this is something most people don't think, but I think their business model they are today, offering saving accounts and fiat dollars, buying bonds, offering loans in Canadian dollars. When I say they're fucked, that's what I mean. They cannot operate with bonds as the base of what they're doing with the Canadian government, issuing more currency debt. I don't see that happening, and they have to move. I don't think all of them are going to survive. I think some of them are going to be fucked. And I agree, it's like a hot take. Like this is like my out on the risk curve kind of example of what could happen. But I believe that nothing like this has existed before. It was just too easy to trap everybody in the system before. And now there's this little leak. And some of the Canadian banks are going to be on some of the boards. They're just going to sit around. They're going to act so slow. You might have some that transition nicely. I mean, Bell went and managed to make the transition from selling landlines to selling data when the iPhone showed up. So we'll see.
Rogers did and expanded beyond it.
Yeah. Yeah, but some of the smaller ones are gone.
Like it strengthened the whole thing for Rogers going from selling TV to data. Like it strengthened that company overall. It became a stronger.
Yeah, but partly that exists because of what Win Mobile founder told us. Just some of the, like Win Mobile didn't make it, right? TELUS didn't make it, got bought. And that's just what I mean.
But those were the startups. Those were the new ones. That's what I'm saying. In our country, if it was free market, yes, we're so regulated.
Yeah. We're talking about two different things. We're talking about, I'm talking about the bank's existing.
Yeah, you're just talking about changing their business model.
Yeah, and I just don't think all of them are going to make it. You think they're all going to make it, and I don't.
There's only like 4 or whatever. We have 5 in this country.
We'll see. Yeah, we'll see. It'll be interesting. It'll be super interesting if the U.S. announces this Bitcoin strategic reserve, which in my mind, I just can't see happening. But I mean, it just seems like it keeps bubbling up and like people.
But they already have a bunch. They just have to keep it instead of saying they're going to sell it.
Yeah.
They've confiscated so many, right? They just have like.
But if they come out and announce like
that they're going to buy,
this is like now a strategic thing for the U.S. government where we're actually stockpiling. We have a goal with a target. Then it's my mind just I can't even go there. And if they do that,
no, that seems. And I agree with that. Like. It does seem crazy because there's so much financial interest pushing against that. That's the type of thing that like, I don't want to say it, but I mean, that's the type of thing that leads to like assassinations. You know what I mean? Like, I don't know. In the past, when you've seen people really push against the system, I'm not just talking the U.S., I'm talking in other countries as well. There's people that go after them. Like, there's other powers. There's coups that happen. There's all sorts of stuff that happen. This isn't tinfoil hat stuff. I'm just going back through history. What's happened? That's a big move, because it
would allow them to devalue their dollar kind of nicely to attract some development of jobs back in the country that has been moved to places of cheaper labor. Like, there's this weird kind of macroeconomic angle.
But what do you think about the people that say about inflation? Because if they bring the manufacturing back onshore, it leads to inflation.
In the short term, because I guess it depends on the speed that this is all done. But if you start getting people better jobs, so they're earning more income because the jobs are of higher value, you can pay people more, they're going to be earning more. So I think, if you throw tariffs on everything and you don't have the higher paying jobs, and then in the short term, the stuff's not made inside American borders, and it's just more expensive to bring that stuff up, I guess it is going to be more expensive for Americans to buy those things. And that.
Yeah, I agree. But I'm like, I still think that's kind of not a good thing, but it's a necessary evil. I don't see any way around it. And I think Canada's in the same boat.
Sure.
Like, we need a period of pain to get to the other side. And I mean, that sucks. And I'm not making light of that. It's not good for anyone, but it's a necessary, if we really truly want to fix the disaster that we're kind of, the situation we're in and the disaster we're headed for, if you don't want to call now a disaster, we need short-term pain. We need to start investing within the country. We need to build out manufacturing within the country. We need to build out innovation. We need to invest in our natural resources. We need to do this. And when we do this and we bring jobs and manufacturing back here, we're going to pay people more to do the work here than we're going to pay people in China or Vietnam or whatever the hell else it is. So the cost will go up, but then we get rid of the stupid taxes on things. We do other things to help alleviate some of that, like this ridiculous carbon tax BS. You start getting rid of stuff like that, and we do things properly. So there's going to be a period of time through that, and maybe you try to do it slowly, so you try to mitigate that as best possible, but there's no other way around it. But I mean, how many people are be like, perfect, let's do it. I want to suffer for the greater good. It's just, the feasibility of that just seems smaller and smaller to me. But there's no other way. And instead, we're just going further down this path.
Unless Trump does it to such a degree where, we have an election here.
And then everyone's got
conservatives come in and they say, hey, listen, we got to copy the Trump model and we got to do it. And everybody's kind of behind it, or at least a majority of Canadians are behind it.
Mm-hmm. In Argentina, they just removed, was it import taxes on everything? Or most things. And that was one thing that I didn't dive into yet, because I'm trying to understand that a little bit further and how that helps them if they're bringing more and more foreign goods in. But, anyways, that's something that I just got to consider, because I was like, oh, so how is that helping them? Because I know they've made some big changes, and I think their inflation's gone from basically, what was it, like over 1,000%? Like, it was super high. I think they're down to
the lowest in 3 years, 19%. I thought,
something like that. So, like, there's been big changes there, and the pain. I was just listening. I know this is from Malay interview, so obviously there's going to be an opposing opinion. But the pain was relatively short lived as things kind of got going again. The middle of this year. Wages have started increasing.
See, when they removed rent controls, more rental units came on the market at a better price.
Yeah.
Yeah, I feel like the timeline we're in is pretty fun right now. Okay, I do think in the short term, Trump on Canada is going to be a little rough, because he has no incentive to work with the current regime here in Canada, and he will just kind of lay down the law because he has the mandate by the American population to kind of to protect America. So I think in the short term, in the next 6 months, it's going to be tough on Canada, because negotiating with the U.S. with somebody he doesn't clearly like, and where he has the incentive to protect America, he has every kind of incentive to go on the record as being tough on other places, and that's going to include Canada, unless it's just selfishly in their best interest, something to do with energy or something.
Yeah, we're at a major disadvantage there. Even starting negotiations, we're not in a good spot. Yeah, for sure.
I wanted to just talk to you quickly about some of the housing data. I think it was some of the Ben Rabideau data that he put out. and some of the TREB stuff that's coming out from the Toronto Regional Real Estate Board is that it looks like single family home inventory and condo inventory. It looks like, you know how listings were going up, so inventory was increasing, and I think a lot of the real estate bears were saying, okay, this is it, it's just going to keep increasing and there's going to be no buyers. I feel like on the data, it's now kind of maybe hitting a top or plateauing.
It seems that way on the resale market. It seems that way. There was something just came out today about or yesterday, new home sales in, I want to say Ontario, it might just be Toronto, are down 91% over their 10-year average. I think it might just be the condo specifically, but and it's just leading to, so the resale market seems to have kind of seems to be leveling off here, because the inventory, although it's come up, buyers have kind of peeking their heads back out, and it's kind of the absorption's happening now. We're going into a weird time during this because it's like December, January, historically slow time, so it can get skewed again. So I feel like the data might get a little bit wonky, for a couple months until like February.
Yep.
But it seems that way.
And even the February data will need to wait really to March to see some of the February data.
But the new home construction, which if you're looking at Toronto, is primarily condos, is primarily high density, high rise condos. With those sales being so low, there's going to be no new projects coming on the market like we're talking about. And there's got to be other housing solutions.
And we're losing skilled labor because there's no new jobs. So anyone who has like a skilled labor position might move to another area of the country where they can get a job.
Yeah, so it'll be interesting to see. So resale is a little bit different. New home, it'll again, if the condos next year, completions are set for, I think it's a record. So it'll be higher than this year. It'll be a record year for completions. That's not going to look great, I think, on the condo market. We'll see how much absorption can really happen with that. But man, we're really setting ourselves up in that area for a shortage,
supply problem.
Yeah, supply problem in a few years. Like we really, really are.
Both of our friends are in the construction industry, and one I was talking to on the weekend basically just said, listen, we're taking jobs, we're making no money just to keep some of the few guys that we haven't let go working.
Yeah.
And I don't know how long we can keep this going.
Yeah, I talked to a landscaper that I know recently, and I said, how are things? He's like, we weren't that slow for a while. But he goes, this year it kind of fell off a cliff, and they got some commercial jobs on their commercial division that this guy that handles the residential side, normally his guys won't go over there. But he's like, you know what? It was a blessing. He goes, we kind of slowed so much down that they needed the guys, and it was perfect. It kept our guys busy on that side. So maybe we are going to get this half-point cut in December. We were starting all this off by saying they're mailing out the checks, so maybe that's going to be inflationary. They don't have to do a half-point cut. They might do a quarter-point cut, or maybe we still get the half-point cut in December. Maybe Things on the streets talking to people
are slow.
They're really slow. But at the same time, I think some of the industry, so like in some of the contractors renovations and stuff, we're seeing some of that. It's not like it's booming by any stretch, but it's people are now, the guys I'm talking to, they're like calling for quotes now.
Yeah.
Whether they do it or not, I don't know.
Yeah, it's not crickets, not complete silence, but it's not booming.
They're not
just in this middle chop.
But no one's signing on the new jobs, but they're exploring. And that's what we're seeing too on the real estate side of things. There's more people just kind of poking their heads out and be like, oh, okay. And there's some people like saying, okay, this one looks good to me. And some investors now, and again, I want to talk about investors that are like investing long-term income producing assets, that type of thing. Not like, oh my God, can I pick up a condo and flip it in 6 months? That to us is not really an investor. So it's, they're looking around and they're looking at some of these opportunities that are coming up. They're like, oh, okay, these numbers are starting to.
Well, the cash flow is starting to work again because rates are coming down.
And if they come down a little bit more, right, and rents have increased, and there's like some inventory, so they can negotiate a little bit. They're like, oh, this is pretty good. And then the ones that are buying something, then adding a unit, all of a sudden those numbers on some of these properties that we've seen recently, those numbers start looking really good for people. There's a little bit more work involved for those investors, adding another unit or whatever. But it's like then those numbers start looking like really attractive. So we'll see where it goes. But
the next big indicator then, I guess, just thinking this through, is the March real estate data. That's the first real data, because that'll give us a bit of February, because January is really not, I guess it could be insightful, but like that's the first one that has any possibility of any meaning.
I think so.
Even that's going to be a little light, because you're looking then at January and February data.
It's weird because, the weather has so much to do with it. right?
Yeah,
like in the past, if we have a harsh winter and it's like long with snow, like let's say through February,
February's screwed.
The market is really at a halt. But in the past, when we've had, and I'm talking in the past before the years where it's just like, everything was booming at all times, right? I'm talking like more historic norms. If we have an early thaw or it's a light winter, the market picks up again right in February. So it's different. It is different times. So it'll be, it's kind of wait and see a little bit. But the only other thing to that is if people are in financial distress and we see because of that listings start to really increase because of financial distress, that changes.
But with the rates coming down, I feel most people who have hung on this long might be able to make it through. And that's kind of why
I think so. And
the banks are going to see more of that than we will. And that's why I kind of think, are they going to squeeze out another half point just, because these mortgages need to be renewed and like a lot of them come up in 2025, 2026.
I think the biggest challenge next year in the GTA is the number of condo units slated for completion.
Yeah. It's going to be
that's the biggest challenge. I don't know. Well, you never know. Like maybe rates come down low enough that absorption starts to happen faster.
Yeah, agreed.
I don't know, but that's there's some eyeballs, whether it's OSFI or Bank of Canada or the government, whatever. There's eyeballs on that thinking, oh shit, what can we do here to kind of like mitigate this a little bit? Right. So, and it just shows how bad central planning, because that's the problem.
That's what I was just thinking. As you're saying, if we just had a better government in here with everything Canada has to offer.
Well, it's just, but not even any government. Central planning, you can't have central planning on the monetary side and worry about the Canadian real estate market, the Toronto real estate market, because and just adjust things for that, because then it messes things up out on the East Coast and in Winnipeg and Calgary. Like they're all in different states. So when you just put these new laws in place and you're thinking, well, we got to kind of protect this a little bit, and they do have to, because it impacts the bank, so they want to, not just because they're like so focused on real estate prices, but that's where things kind of get screwy. Just like when this change now, but the mortgage changes, how you can now qualify for high ratio mortgage up to 1.5 million. Well, 1.5 million in Toronto, like, okay, well, that kind of maybe makes sense. The property prices, 1.5 million in Halifax. I have no idea what it buys you. But I bet you it's a pretty flippin' nice home, and it's not a starter home, right?
Yeah.
So that it just messes things up that way.
I mean, just 2 hours outside of Toronto, 1.5 million gets really interesting. Yeah. But in Toronto, 1.5 million, it's just kind of ridiculous the way it's set up. And I think the future of housing, that website rehousing.ca, that's that joint venture between the University of Toronto and some architectural firm that I don't know the name of, so I can't give them credit right now, but rehousing.ca. If you haven't visited that, you might want to check it out, because they have like all these templates and a kind of path to adding like a second suite or a garden suite. And it's laid out really nicely in steps. Like if you click on the options to add a legal second suite to your house, it'll give you the cues to like check the window size. And most municipalities want this much like sunlight in a room, and check the exits and check the ceiling height. It's probably the best website I've seen for that kind of stuff. Yeah. And I think it's something we keep talking about in here with everyone, is that's the next big opportunity for real estate investors. I feel like the easy real estate investor, I'm not talking about the condo flipper, speculative kind of condo attack right now. And I'm not talking about the person who just buys a property to rent it out. I feel like there's this big opportunity that if you're willing to buy a house and add a legal second suite and throw a garden suite in the back, that's a huge opportunity where the big developers like Daniel's Group and Mattamy, they don't want to touch that kind of stuff. And the beginner investor really isn't kind of suited for that stuff. But if you're willing to tackle that, I feel like there's going to be is the huge opportunity for the investor. You know how we talk about a missing middle in property? There's like this missing middle investor where some of them are stepping in there, but more are going to.
And more builders are going to start offering those types of things. So I think that, it's an opportunity now. And
you mean builders like new homes will?
Yeah. New home builders will start.
We'll have like a second suite and a garden suite.
Well, compared to even 10 years ago, how many are willing, and how many subdivisions are they willing to add just a basement, a small kitchenette and an entrance to the basement? Like they're far more than they were, and now when we had Eddie and Justin on here, they're offering a second suite and then a detached accessory dwelling unit.
What city are they doing that in?
That's in their Welland. Well, I think it was Welland, Niagara region, but I think it was Welland. Might be Niagara Falls, but I'm pretty sure it was Welland. Okay. So that they're like, we might not be the first. We haven't seen another one, but in Ontario, but they feel like they're one of the first. So now they can, the new home builder, you're getting 3 units if you want them. Right. So, and again, it'll be a different product from the builder, just like a regular subdivision home is a different product than custom. Than if you do it yourself afterwards. And so there'll always be opportunity, but you're seeing demand for it just from affordability. That's right. Multifamily, multi-generational homes and things like that. So yeah, it's more, more people per unit, more units per property, like we talk about here for
technology trends. Assisting with all this. Like rehousing is let's face it, just a website, but you now have access to the information.
Well, it makes it a lot easier than having
places
to go
like Addy Invest, kind of doing crowdfunding on different things. You can see technology coming in there. I think just to kind of add to that, the trends that we're looking at, the Nick that you just said, are more units per property, more people per unit. The money in this country continues to get debased in the entire West. Technology enhances all of these things. So you have this opportunity that you can kind of like pick your angle, and there's a lot of good opportunity in front of you, because if you really want to specialize right now and you just want to do like, I'm going to be the master of second suites or adding on garden suites, there's a huge opportunity.
Oh, for sure.
In new home construction, like you're saying, or taking resale stuff, like the opportunities right now. And if you're a little tech savvy in some of this stuff, geez, the opportunities are kind of really, really great. So like, it's kind of a fun time.
There's always opportunity, no matter what. Like, even when we're talking about the system, and you're like, oh, it's kind of like screwy right now. Doesn't mean there's.
Well, I just mean the old system. Bitcoin's the huge opportunity. What gives you a beautiful opportunity?
There's opportunity at all times, in my opinion. You just have to figure out. I think it's important to figure out whatever system you're in, whatever system you're playing by. This goes back to like when I was in high school. Like all of us, you're in high school. You're like, okay, I kind of figure out how late I can be for a class before they put me to the office to get a slip. How I can get my own slip to skip a class. Like, you figure out the system, and then you kind of work within that system to get what you kind of want to get out of it. It's no different. But the problem, I think, is for where a lot of people are so busy with things that they can't figure out the system. Yeah. Once you figure out the system,
they're busy paying bills and paying for life and working.
But once you figure out, there's lots of opportunity. You just got to figure out those little angles. I don't know why I always goes back to high school and skipping class, but that's what I always think about.
See, you were skipping class, and I was trying to figure out how to get the hall pass so I can get to the library to write essays. Yeah. We were completely on other. We were both trying to work the system. There was only like 10 hall passes at Pocock when I was first there in the old school, and I was like, how do I get one of the 10 passes so I can get in the hallway to get to the library?
Hey,
you were trying to escape the school. I was trying to go into the school and do more homework.
There was a restaurant called Italian Express, and it was around the corner from the thing. Yeah. And it was either first period math class or go to Italian Express and hang out with my friends. So we would meet there in the morning instead, and it seemed far more interesting to do that. And Italian Express
was a great place. I don't think it's there anymore.
No, but it cost
that's the place that was on Eglinton.
Yeah. But it cost me like a breakfast sandwich every morning for this math teacher, man. Like, I spent a lot to miss those classes.
But you did it. You were investing in the skipping of classes. Yeah.
It was the part of the system.
Yeah, I was writing essays. You were buying sandwiches for the teachers to skip class. There's a couple, I guess. We have a date locked in for April. Do we want to announce that date to get it on?
Sure. Yeah, might as well.
So,
I don't know it.
Saturday, April 12th is the next
I was going to say 16th, so I'm glad you said April 12th.
Saturday, April 12th is the 2025 is the Your Life, Your Terms event. We have some pretty fun announcements. We're going to change things up a little bit on Saturday, April 12th for the next Your Life, Your Terms event. But if you're trying to block your calendar and plan for 2025, that is the date. And I'm trying to think of any other announcement. If you're listening to this and you want to get more information from us, rockstarinnercircle.com is always the best place to go to. I guess rockstarinnercircle.com, you'll get like videos and like digital books and reports and anything any of the live classes that we're offering. So all of that stuff is available to you there. And I guess that's it. The Leafs are obviously going to win the Stanley Cup in 2025. And that's the latest and greatest news. Anything else?
No, I have to take back. I forget what game it was. I knew it was early in the season, but I did have my Leaf rant on that group chat that we have.
It's early.
And I knew it was early, but I'm like, I don't care. I'm done after this game. I'm done. It was like game 3. I'm like, screw it. Forget these guys. And I'm trying to ignore them.
Berube can keep yelling and getting people to kind of play. Like if he can get Nylander, back checking, which last game I actually saw him back check.
I almost had a heart attack. I almost had, because you know my views on that. Yeah, I almost had a heart attack.
Me too.
Yeah.
But if we can get him back checking, if it takes Berube to scream at him to get him back checking, we have hope. Listen, I think we can get by the first round. I think we can get by the first round. And if we do, the Stanley Cup is ours. We're going all the way. If we get past the first round, and then we're going to repeat. Then we're going to repeat in 2026 because McDavid's going to come. Because we're going to win this.
Oh, yeah.
Here's how it's going.
No, didn't he sign an extension?
It doesn't matter. We're going to work something out. So we're going to win in 2025. McDavid's going to be like, oh my gosh, I want to be winning too. I want to come there and I want to win. And he's going to come to Toronto, and then we're going to win with McDavid in 2026. We're going to be back-to-back champions. It's going to be amazing.
No comment.
It's going to be amazing.
No comment at all.
That's it. We're done.
Yeah.
Thanks.